How much does $1 million life insurance policy cost? Believe it or not as much as you think, and you need to start as young as you can. My son's 23 and will have one by this summer and inside of a trust. So you can start generational wealth planning and insurance planning, because the kind of what we're going to talk about, I'm going to bring a guest on right now, and we're going to talk about what's called infinite banking. It's a way to do life insurance, not term insurance. That's like death insurance. How do you use life insurance not only for generational wealth, but to be your own bank? So the three things we're going to talk about specifically today around insurance is, first of all, what's the difference between death insurance and life insurance? Number two, why whole life insurance might be and is really a better choice for a multi-million-dollar life insurance policy. And then number three, we're going to talk about the cost of $1 million life insurance policy and what it affects. So I have Jason Henderson with me today. He's my partner in INSURETY Systems, where we're going to send you for a beautiful free report to help understand how insurance also could be set up as your own infinite banking process. So Jason, welcome.
Hey, thanks to be here, Laurel.
So talk a little bit about life and death insurance, because we do make a big distinction that there's death insurance, which is most people get, and life insurance.
So that term death insurance is really not known to most people. They think everything is life insurance. We're using that as a way to have people recognize that death insurance is simply term insurance, and there's only one benefit, and that happens when someone's dies. So like you often say, someone's got to die in order for that to be useful.
Yeah. Well, and then a lot of times it terms out, and then, you paid for 20 years, and unless you go again, I mean, it really doesn't work. So explain real life insurance and what we do.
So real life insurance is something where there's benefits during your lifetime. So that, life occurs and your benefits occur versus the benefit only happening when someone dies. So what it is, though, is it's specially designed whole life insurance is what we really want from a mutual company that has the ability to accumulate cash. We then are able to use that cash to finance all areas of our lives, whether that's something like a car or something like a rental property.
So talk about why whole life insurance is a better choice. I mean, for that $1 million policy, and we have a lot of millionaires, quite a few people hitting, like in year 3 this year, hitting their millionaire status, which is awesome. So just describe that. Like when we were together at the big table, you did a great description of really just showing the certificate, like how it worked.
One of the examples, you mean using it as a banking system or the difference in price?
Both.
Okay, so let's use it as difference in price. So when you think of death insurance, it's really similar to renting an apartment. You're there for a very long time. You've gone through a whole bunch of rent, and then you leave and you have nothing. When you have whole life insurance, it's like purchasing a home. You're actually purchasing an asset. So your equity in the contract increases every time you do premium. So let's talk a minute about that $1 million policy. For a 45-year-old male, standard health, the annual premium would be $30,985. Now, over 30 years, you're going to go through about $121,275. That's the total amount that you're going to put out. The very next year, in the event you wanted to keep that, your premium goes from $39.85 to $119,000. That's a trick that the insurance companies use to get you to go away from the term, that you don't renew it, right?
Right.
The price of something when it's in insurance has all to do with the probability of it happening. Now let's talk about $1 million policy of whole life designed to the maximum for cash value. Well, guess what? It's $42,610. Whoa, that's way different than $18 or $39.85, right?
Right.
Well, in the same 30-year time frame, you would have put out $345,000 in premium with the whole life, yet the value in your contract is a little over $1 million, right? So in that time frame, okay, what can I do with $1 million or $500,000 in that time frame, where your ability to get rates of return are basically limited only by your imagination?
Yeah. So how can you use it as a bank? Like you earlier said, you'd buy rental property and car, and I know you've had, bought a lot of property using yours. So give some examples of that.
Well, I'll give you a perfect example. I'm sitting in a building in which it's 100% financed using my system. Okay. Before I built up my policies in order to do this, I had a mortgage with a bank that's just a couple blocks from here, and my mortgage payment was about $2,000 a month. So I dutifully wrote that out. and send it to them. And I'd get a statement that you paid this much interest and this much, you got this much equity. However, where was the equity? Was it in the walls with the brick and mortar? I don't know. In order for me to get access to it though, right? Capital is only useful when you can get access to it. I need to go back there and get on my hands and knees and beg them to give me access to it. When I refinance that using my policies now, when I make out a $2,000 check, it goes to the insurance company. I have access to $2,000. I have access to my principal and my interest. Follow the thought experiment a little bit further. In 1 year, I have $24,000 liquid money that I didn't have the other way. Now starts opening the doors to, hey, I can go buy a duplex, or I can go after this or that, or whatever it is, based upon what I'm doing with my money.
So for those of you who want to learn to be a bank and use insurance, insurance right now, I flip and maybe some land, but there's not a lot of really great recession proof. And given the politics and dynamics going on in the world, this kind of policy is great recession proof investment, a vehicle. And before we go to the third point really quick, I want you to subscribe to our channel. You're here on our YouTube channel. It's here. We're here 5 days a week, 8 to 12 minutes. This is a conversation for anyone that's 5 years old and older, and your kids are on this lovely device. So have them out here. We're going to be putting out a YouTube journal coming soon. Can't wait for that, where you're going to write down what are you learning and what are you going to do. So after 365 days, 52 weeks of listening to this, I can promise you your entire behavior around money is going to change. If there's a topic you want us to talk about, put it in the comments and we will be right there. So when you subscribe to our channel, make sure you click that notification and watch the video every morning. So Jason, let's talk about this last point, right? Which is, the cost of a policy, what it affects, really, the way we set up generational wealth is you set up revocable and irrevocable trusts, and these kind of policies also being held in trust. Talk about how that creates really generational wealth too.
Well,
I think that's the biggest effect.
Well, Loral, the single best tax advantage in the whole code is life insurance. And that is for the fact that life insurance, particularly whole life insurance, has existed for hundreds of years, and it existed before the tax code even came into existence. And what happens is that the beneficiaries, often the next generation, the whole death benefit comes to them income tax free. Now, the very wealthy are going to be subject to some estate tax. And one of the ways of not breaking up the estate to generate the income for the estate tax is to have life insurance that comes in income tax free. Yeah. Instantly, they have the money to pay Uncle Sam the estate tax, and they don't need to sell part of the company or part of the farm or whatever it is.
And isn't the current level, is it 11.2 million right now, or has that gone up? You can,
that's such a great point. I don't like it for the fact that Congress ups and downs. I think it's about that. It's scheduled to sunset soon and go way down. We're at the whim of someone, back east telling us what to do. That's why you do wills and trusts and insurance. Is it's outside of the government program. It's governed by private contract.
Absolutely. So those of you that are interested, I want you to go to INSURETYSystems.com. It's in the description below. Click on the link, go get the free report from Jason and book some time with him. At least have a conversation. Don't think you can't afford it. I think after a one-on-one and really helping you see how it's going to be a high value to not only your life for generational wealth and planning, it's a must-have. It's a must-have. So go get our report, get on Jason's schedule, and we'll see you tomorrow.